Right now, XRP is sitting at one of the most important technical decision points it has faced in weeks. The price is testing a key resistance zone between $1.135 and $1.145. And what happens at this exact level in the next 24 to 48 hours is going to tell us a lot about where XRP is heading in the short term. Now, here is why I am paying very close attention to this specific zone. On-chain analysts and technical traders across Binance Square are pointing to the same thing right now. XRP is struggling below key moving average resistance levels. Volume is fading on the upside, and the structure remains slightly bearish unless price reclaims and decisively closes above $1.137. This is what a decisive technical moment looks like. Not a crash, not a breakout, a test. And how this test resolves, with a rejection back toward 1.10 or a decisive reclaim toward 1.20, sets the tone for the next leg of price action. Today, I'm going to break down exactly what this technical setup means, what the specific levels are that every XRP holder needs to watch right now, why the current volume pattern is sending a specific signal about market conviction, and what the broader fundamental picture says about whether this is a temporary pause before a breakout or the beginning of another leg lower. Welcome to XRP Verified, daily XRP analysis built honestly for the US investor. Subscribe and turn on notifications. Let's get into it. Let me start with what the chart is actually telling us right now, because I want you to understand this setup clearly, regardless of whether you are a long-term holder or someone watching short-term price action. XRP is currently trading around $1.13 to $1.15. The key resistance zone that matters most right now is $1.135 to $1.145. This is not a random number. This zone represents the confluence of multiple moving average resistance levels that have been capping XRP's upside attempts over the past several weeks. Here is what that means in plain English. Every time XRP has tried to push higher recently, sellers have shown up consistently in this price range and pushed price back down. That pattern of consistent rejection creates what technical analysts call a resistance ceiling. And right now, XRP is testing that ceiling again. The volume picture is the most important signal here. Volume is fading on the upside moves. When price approaches resistance, but the buying volume behind it is declining, that is a warning sign. It tells you that buyers are not stepping in with enough conviction to push through the resistance zone. The buyers who are there are getting exhausted, and exhausted buyers cannot sustain a breakout. What does this mean practically for the next 24 to 48 hours? There are two scenarios. Scenario 1, XRP gets rejected at the 1.135 to 1.145 zone. Volume continues declining, and price pulls back toward the 1.10 to 1.118 support area. In this scenario, the short-term structure remains bearish, and XRP needs to find buyers at lower levels before it can attempt another push higher. Scenario 2. XRP gets a surge of buying volume that pushes price decisively above $1.145 and holds there on a 4-hour or daily close. In this scenario, the resistance becomes support, the structure shifts from bearish to neutral, and the path toward $1.20 and then $1.34 opens up. The key word there is decisively. A brief spike above $1.145 that immediately gets sold back down does not count. For this zone to be genuinely reclaimed, price needs to close above it with meaningful volume and hold. That is the standard technical confirmation that resistance has become support. Now let me talk about why this technical moment exists in the broader context. Because short-term charts do not exist in a vacuum, and understanding the fundamental backdrop helps you interpret the technical signals correctly. XRP has been in a consolidation and correction phase since its high near $3.50 in July 2025. That is approximately 350 days of corrective price action, with a total drawdown of around 71% from the all-time high. The weekly downtrend channel has defined price action throughout this period, with each recovery attempt failing at lower highs. The current 1.135 to 1.145 resistance zone sits within this broader downtrend structure. Overcoming it requires not just buying pressure at this specific level. It requires enough sustained buying conviction to begin breaking the pattern of lower highs that has defined XRP's chart for the past several months. What could provide that conviction? The same catalysts we have been tracking all week. The Clarity Act, targeting a Senate floor vote in mid-July. The Japan FSA XRP in late-stage regulatory review. RLUSD growing at 97% in 30 days. Ripple Prime inside the DTCC working group. Post-SpaceX IPO liquidity potentially rotating back into crypto assets. Any one of those catalysts arriving as a confirmed positive development could be the external trigger that provides the buying conviction the chart currently lacks. The technical setup is a coiled spring. The fundamental catalysts are the potential release mechanism. Right now, the spring is coiled. The question is, what releases it and when? Now let me talk about what the smart money positioning data is saying, because this adds important context to the short-term technical picture. XRP open interest. The total value of open derivatives contracts is currently near cycle lows. It peaked at approximately $1.4 billion in January 2025 and has bled down significantly since then. Near cycle low open interest after a major correction historically signals one of two things. Either the market is giving up and institutional players are exiting, or the slate has been wiped clean of leveraged speculative positions, and smart money is beginning to rebuild from a clean base. The ETF flow data suggests the second interpretation is more accurate. In May, XRP ETFs drew $132 million in net inflows, while Bitcoin ETFs bled $2.4 billion in outflows. Out of the last 200 trading sessions, XRP ETFs have seen net outflows on only 14 to 15 days. Globally, XRP ETFs hold 1.3 billion XRP. These are not the flow numbers of an asset being abandoned. These are the flow numbers of an asset being quietly accumulated by institutional players while retail sentiment is at or near maximum fear. Exchange supply of XRP remains near 8-year lows, approximately 1.6 billion tokens available on exchanges. The on-chain picture consistently shows large holders reducing their sell-side presence even as the price remains suppressed. When you combine near cycle low open interest with continuing institutional ETF inflows and declining exchange supply, that combination has historically appeared during the accumulation phase that precedes the next major price expansion. Not every time, not on a guaranteed schedule, but consistently enough that it changes how you should interpret short-term bearish technical signals. A rejection at the 1.135 to 1.145 resistance zone, if it happens, is not necessarily the beginning of a new leg down to much lower levels. It may simply be another data point in an accumulation phase where price oscillates between support and resistance while institutional players continue building positions. Now let me give you the complete level map for XRP right now, because having these numbers clearly in mind removes emotional decision-making from the equation. Starting from current price and working downward, the first support level is $1.118. This is the immediate floor that price needs to hold if rejected from the current resistance zone. A bounce from $1.118 with increasing volume would be a constructive sign. Below that, $1.10 to $1.108 is the next meaningful support area. This zone has held multiple times during the recent correction and represents a level where buyers have historically stepped in. The critical floor is $1.05 to $1.08. Losing this level on a sustained daily close would be a significant technical deterioration and could open the path toward the psychological $1 level. The $1 level itself carries enormous psychological weight. Losing it on a daily close would likely trigger additional panic selling from short-term holders. Now working upward from current price, $1.145 is the immediate resistance ceiling being tested right now. Above that, $1.20 is the first meaningful recovery target and the level that would signal the short-term structure is shifting toward bullish. $1.34 is the next target after that. Reclaiming this level with strong volume would be a significant positive signal. $1.45 and above is where short-term sentiment would flip from bearish to cautiously bullish among technical traders. For longer-term holders, the targets that analysts have been projecting based on fundamental catalysts converging remain in the 1.65 to 2.20 range, with a pathway toward previous all-time highs and beyond once the Clarity Act, Japan ETF, and full institutional deployment are all active simultaneously. Let me close with the honest, big picture, because this is what matters most. Short-term, the technical setup is a test. XRP needs to reclaim $1.145 with conviction to shift the structure. Failing to do so likely means another test of lower support levels before the next genuine attempt at recovery. This is normal price action during an accumulation phase. It is uncomfortable, it is frustrating, but it is normal. Medium term. The Clarity Act in mid-July, Japan ETF decision, and post-SpaceX liquidity rotation all represent potential catalysts that could provide the external buying trigger the chart currently lacks. One positive development in any of those areas could change the technical picture quickly. Long-term, the fundamental case for XRP has never been stronger. The infrastructure is more complete, the regulatory clarity is closer, the institutional adoption is more confirmed, and the on-chain accumulation signals are more consistent than at any previous point in XRP's history. Patient, informed investors do not panic at resistance tests. They understand where support is, they know their risk levels, and they stay positioned for the catalysts that are approaching, because those catalysts do not care about short-term chart patterns. Stay informed, stay patient, manage your risk, and do not let short-term technical indecision make long-term decisions for you. If today's breakdown helped you understand the current XRP setup, hit the like button, subscribe, and turn on the bell for your daily XRP update. I will see you tomorrow. Stay sharp, stay patient, and as always, stay verified.